Happy Monday. This is Cynthia Fick, and this is the September 26th stock market update. So it's been an interesting ride, and on Friday, the market broke through some major trend lines that I was hoping it would hold. I'm just going to go straight to the chart. I've always said that I, can't predict the future. I don't have a crystal ball. All I can do is try to look and see what patterns the stock market is showing and listen to what it wants to do. And I'm going to let you in and show you a big chart I think will help explain a lot of things that I talk about. Just going to go straight to a share screen, and that is of a chart of the S&P 500 going back to 2007. So here we go. On this chart, you can see this. You probably would have been shocked if I told you that I could lay two lines on a chart of the S&P 500 and that they would somehow form a pattern that repeats itself on those two lines. Well, here we have it. You can see the big drawdown we had in 2007, 2008. And again, drawing the line of all the tops in the market from that 2008 timeframe on into today. And then we draw the bottom line showing where the market bottomed out in 2009 and then again in 2020. So that middle line is real important because that's the line that I'm always watching. You'll see, many times the S&P 500 would trade into that middle line. And, here's one of those times. And it took a few months for that to work out. And ultimately, the market broke down and touched on that bottom line. Bounced right off of it, back to the races. It broke through that middle line here in 2011, came close in 2015, pierced it in 2018. And again, we know what happened in 2020. Again, bounced off the bottom line and raced towards, the top. So here we are again. About a month ago, in this, my update, I said, I sure hoped that this was a bouncing point, that the market was going to take off, and it looked like it would until, Powell talked at Jackson Hole, and that seemed to kind of change everything. And I sent out a video today of Professor Jeremy Siegel with the Wharton School on what he thinks about what the Federal Reserve is doing right now about the real inflation that we have. And I think it's real important that today you go back and you look at that, because that reflects my sentiment exactly on the missteps that the Fed has made right now. So here we are again, retesting that middle line. And unfortunately, on Friday, we broke through it. So looking back, are we here in the chart? Are we here in 2011 in the chart? 2018, where we pierced through that middle line, and what could be the potential downside. So we broke through this line on Friday, and the lower line is closer to, they're saying 3,330 on the S&P 500. There's a lot of Federal Reserve members coming out and speaking this week, and they could rock the market on the upside or the downside. If in any way they back off of their aggressive stance on raising interest rates, the market might really like that. So that is something that could happen this week. On the other hand, it could take a few weeks, a month to work this out. And in the meantime, that's what we're doing. That's what we're waiting and watching. On Friday, we went in and raised a little cash for those of you who were maybe a little overextended for your risk tolerance in stocks. Okay, so we did that, and it's because I don't have a crystal ball, and we need to get defensive. It's like, for those of you who live in Arizona or have experienced a haboob, when you see that storm coming, the first time you don't know what it might do, but the second time you see it, you have a pretty good idea. You need to batten down the hatches, and that's what we did last week. If you have any questions, please reach out. It's going to be an interesting week with all the Fed people speaking. So I will talk to you next Monday. Have a good week until then. Bye.